Okay. Hello, everybody. Good morning, good afternoon, good evening from wherever you are in the world. Thank you for joining me for today's webinar, Investing Essentials for Women. In the time that we're together, I'll be sharing with you 3 essentials, which I also consider to be fundamentals or even requirements for investing with confidence so you can grow your wealth, give generously, and live a life of choice. Let me open with a short introduction and then we'll dive into the material. For those who don't know me, I'm Debbie Sasson, a financial planner and certified coach who has been working in financial services for over 30 years. Back in the mid-1980s, I worked in international finance at Goldman Sachs in New York and in London. Later, I moved to Israel, where I now live, and I worked at the central bank for 18 years. About half the time, I was a portfolio manager managing the country's foreign currency reserves, and about the other half of the time, I was an economist. And because of my background in finance, you might think that I was a financial expert, but reality struck 15 years ago when my husband was diagnosed with cancer. I was 39 years old at the time, and we had 6 young children. I was obviously very worried about my husband's health and wondering what was going to be financially for me and for the family. So we did what we should have done years earlier. We took stock of all our financial accounts and we organized our paperwork. I'll just put you out of suspense by telling you that today my husband, thank God, is healthy and he's completely free of cancer. But back then, when he was weak and undergoing chemo, we discovered a money mess. We weren't in debt because we both had professional jobs and we're not spenders by nature. But we did discover that some of our investments were costing us a bomb because of the high fees we were paying our investment manager and the way he was managing our account, and also because of one particular investment that I had chosen as supposedly the hotshot money manager of the family. And that ended up losing us about $50,000 in a fairly short time. It was not a pretty sight. But I'm sharing that with you to let you know that if there was anybody who could have or should have or would have known how to manage their investments, well, that person should have been or would have been or could have been me, because I had all the resources available to me as a financial professional, including I understand now the financial lingo, the jargon, the language of investing. I understood how financial markets work. I was very connected to the ups and downs of the financial markets, but I didn't get it. And I messed up big time. It's, like my professional life was disconnected from my personal financial life. It's kind of like that expression we all know that the cobbler's children are barefoot, right? He can be taking care of everybody else's shoes, but his own kids are running around without. Or, I was just in Los Angeles visiting my parents and they were telling me about their good friend who's a cardiologist and he smokes, right? Which just shows you that sometimes there is really just, 2 separate worlds, a disconnect between what we know intellectually and what we're actually doing with our lives. So I've spent the last 15 years learning and working in personal finance. First, I got our finances in order in our family. We fired our investment manager and I took over. I did a lot of learning and took classes and I got a mentor, and I took over the management of our financial accounts. And then I started volunteering in my local community as a financial counselor. And finally, 10 years ago, after the birth of our 8th child, I formally transitioned into personal financial planning and coaching. Today, I help people take charge of their money, make better financial decisions, and grow their wealth. So I'd like to take a moment just to recognize each of you, who's here today on the webinar, because I know that this subject of investing can be overwhelming. I've read a lot of posts on social media recently, and I've even distributed some surveys among women trying to understand better what's going on and what's blocking them from investing. And I understand that women feel overwhelmed and even clueless about investing. They're scared. Obviously, the language, the jargon is something that they're not familiar with. They hate dealing with their brokers. They don't know who to trust, and that's something that's really important to women, is being able to connect with the people who are managing their money. And just taking those first steps and getting started is a challenge. So if you're here in the room with us today, or for those of you who couldn't make it and you're listening to the recording, you know, I salute your courage and your desire to take control of your financial future and to learn about investing. This webinar is all about overcoming resistance, getting going, and just starting small, you know, with those first baby steps. Now, a couple of things before we start. First of all, if you have any questions during the webinar, feel free to pop them into the chat box. If I can answer them quickly, I will. Otherwise, I will circle back and try to answer all of your questions at the end of the webinar. And second, if what you learned today makes sense and you're ready to take the next step to becoming a more confident and empowered investor, then at the end of the webinar, I will be sharing with you a special offer. So let's dive in. Oh, my sharing is paused. Sorry about that. That was an accident. Okay, so why women? Why is this a webinar on investing essentials for women? Right? It's a fair question, right? And interestingly, I shared the details of this webinar in a number of Facebook groups this week and last week. If I'm not mistaken, all of them were directed or groups that are for women only and predominantly for female entrepreneurs. And I think that as women, we intuitively understand that it makes sense for us to have our own circles, our own business networking groups, our own Facebook groups where we can support each other, encourage each other, and lift each other up. Right? Do you guys, you agree with me? If you do, go ahead and type into the chat box and let me know that we're on the same wavelength. You know, women talk with each other and they support each other, they connect with each other, and they build their businesses differently from how men do it. So if we do our businesses differently, I don't think it should come as a surprise that on average, women also do investing a little bit differently from men. So it was kind of interesting to me that two different women in two different Facebook groups, and I think even one on my business page, questioned why this webinar was geared for women only. And listen, if there's a man in the room, that's fine. The content is totally appropriate. I'm not going to reveal any like deep, dark female investing secrets. But I would like to point out that there are 6 reasons why I think that women need to have, you know, maybe a different approach to investing than men do. So the first one is that women tend to be much more hesitant and even resistant than men, you know, to get going with their investments. Women are notorious for leaving cash sitting around in their bank accounts, earning little or no interest because they're overwhelmed and they don't know how to get started and they're scared. So rather than doing something that seems risky, or you know they're scared of losing all of their money, they would just prefer to be very conservative, leave the money in the bank, and make sure that they're not going to lose anything. So that's number one. Men tend to be much more, you know, quick to jump in and to invest. Okay. The second difference between men and women is women have a lack of trust. You know, I came across this a lot, that they just don't know who they can trust. And I think it also has to do with the financial industry as a whole, is that the conversation, right? We just said we talk differently, we communicate and connect differently from men, and we need people that are you know, connecting with us and understanding us on our own level. And if men are talking in this sort of like, you know, very male focused lingo, gibberish almost, that we don't connect with, it's much colder, then we don't feel that we can, you know, put our money with them and trust them. Okay. Number 3, when women actually do start getting started with their investments, it's very important to the majority of women to get involved in socially responsible investments. Now, men also, I don't want to say that no men are interested in socially responsible investments, but women definitely score, let's say, higher if it's a score in this area than men do. Women want to make sure that, you know, the companies in which they invest, they're financially successful, but they're also benefiting society. That means they can be helping out disadvantaged communities with, you know, as part of a profit sharing model. Women want to make sure that the companies are paying their employees a living wage, and they want to make sure that, let's say, a big industry, they're not dumping chemicals into the rivers and destroying the environment. And that's something it ranks really high for women. Okay, point number 4 is that women are often the caregivers in the family. Certainly a woman is the one who's giving birth, and she's, most likely to be the primary child minder caregiver in the early years of a baby's life. And as a result, women spend more time out of the workforce during their years of employment than men do. And also with parents, women, if there's, let's say, 2 children, a boy and a girl in the family, it's usually the woman, usually the girl, the daughter, who's the one who's going to be caring for her parents. So for both these reasons, that women are caregivers, they often are earning less because they've spent time out of the workforce, and they're contributing less to their retirement funds, to their pensions, their 401k, superannuations, whatever you want to call it. So we get to retirement age, we get to later in life with less money. And then point number 5 is that we have a longer life expectancy than men, right? We're going to, on average, live 3 to 4 years longer than men, statistically speaking. So we have to take this smaller pot of money and we have to stretch it over a longer lifetime. And point number 6 is that most women, 80 to 90% of women will be managing money on their own at some point in their life, either because they're single, because they've gotten divorced, and divorce is a separate category altogether, but that can wreak financial havoc on a woman, because she will just end up with a lot less than if she had stayed together with her partner. And I'm not at all suggesting that you should stay in a bad partnership or bad marriage. And point number 3 is, again, because of this life expectancy issue, is that, a woman will often be the widow in the family, or there are many more widows than widowers, and a woman will have to manage money on her own at some point in her life. So for these reasons, these 6 reasons, I think it's critically important for women to connect with someone who speaks their language and to become confident investors so they can take better care of their money and grow their wealth for the long term. So how exactly are we going to do that? And I have a 3-pronged approach, or what I call the 3 pillars of confident, empowered investing. And that involves, number 1, our money mindset. Number 2, our money habits. And number 3, our money, what did you say, Tash? It's sort of depressing and empowering at the same time. Okay, well, we have to look. That's part of our mindset, is that we have to look at the empowering part of it. We know that we're going to be taking care of our money, so we're going to see this as one of our challenges in life. And women are no strangers to challenge. We definitely can overcome pretty much, any obstacle that's put in our path. So we're going to talk about this, is why is it different for some, strange reason? Why is it different when it comes to managing our money? Okay. So again, money mindset, money habits, money education. All right. So let's start with looking at our money mindset blocks. And they're 5, there's probably more, but these are the main ones that I came up across. It's scary and risky, right? Because we all know about financial market crashes, right? It wasn't so long ago. We still have it in our mind, that great financial crash of 2008, and people still seem to be reeling from it, even though the stock market has surpassed where it was now nearly 10 years ago almost, right? The jargon is confusing. We've talked about that a little bit, but hey, we can learn languages. I've moved to a new country. I was born in America. I live in Israel. I learned a new language, more or less. People learn programming languages. Like anybody who's on the webinar today and has an online business, we have to deal with tech, right? And that's a whole new language. If you're have an email list and you're sending out, using whether it's MailChimp or ConvertKit or whatever, we have to learn those tech things, and we can figure these things out and we can manage them. So the jargon of investing is just another language we weren't born with, right? None of us grew up speaking any language. So it's just something that we need to learn, and we can master it if we get our mindset around the fact that, hey, yeah, it's just something new and I can do that. And Jen says, learning a new language is a beautiful way to get to know a new culture. That's right. Jen is living in Dubai, right? Whether it's a money culture or a world culture. Yep, totally true. Okay, let's see. Number 3, It's not my zone of genius. The corrupt financial system is number 4, and I don't have time. Okay, I'm going to go back and address these in a little bit more detail, but what I want to do is start by looking at point number 1. And I have a graph. This is the only like techie part of this webinar today, and that is the fact that it's scary and there can be financial market crashes. And this is a very long, more than 100-year history of the stock market in the United States. I picked the United States because there's great information available, because many of us have heard about the great stock market crash in 1929, and that's this big circle over here on the left, the lower left side of the graph. And if you look at this graph, this very long history, stock markets can be scary in the short term, but if we look at it and we follow this graph up from the lower left-hand corner to the upper right-hand corner, what we'll notice is that over time, and investing is a long-term type of activity, over time the stock market always goes back up. And if you are in need of money in the short term because you want to put your child through college, or you want to put a down payment on a house, or you need to replace your car, something like that, investing is not the right place for you to park your money. But investing is something that we do for the long term, and if you have that endurance, that wherewithal, that long-term perspective, over the long time, it's like a straight line almost from the bottom left corner to the upper right corner. The markets always come back. Now, I can't, look off into the future and tell you that, yes, for the next 100 years, the markets will go up. Past performance is no guarantee of future returns. But if we're looking at a global economy as an expanding place, consumers continue to buy, companies continue to produce, the world continues to expand, then we would expect that the stock markets over time will continue to invest. I'm going to talk a little bit about those technical details and exactly what stocks are. I'm not going to go into it now. That's a slide that's a little bit later on. I just wanted to give you this sort of long-term perspective that, yes, over time, stock markets shouldn't be scary, and we're going to have to click back into our mindset when we address it. All right, so let's go back to this slide. The jargon we talked about. Let's just talk about point number 3. It's not my zone of genius. Nobody was, born understanding finances, investments, and how to, grow their wealth in the financial markets. It's something that we all have to learn. Again, I do think there's something in the male psyche, the male ego, that makes it easier for them to do it, whether it's their testosterone or that Y chromosome or whatever it is. They seem to feel more comfortable jumping in. And I think a lot of that also has to do with role modeling. If we think about like groups of men and groups of women at a dinner party or something like that, right? After everybody finishes eating, so the men will gather on one side, maybe they'll like smoke their cigars and they'll talk about the investments, the stock markets, the horse races, whatever it is. And women will gather in the kitchen. They'll talk about babies, they'll talk about recipes, they'll talk about diets. Men and women will separate and talk about two different things. And it's a natural part of the conversation for men to talk about money, whereas it's not a natural part of the conversation for women. And part of that is role modeling. Our mothers didn't do it. In the United States, for example, women didn't even have credit cards in their own names until the 1970s. So, we are really treading a new path here as women who can become confident investors, and we can then take that on and role model it for our children and for the next generation. But it's something that we just don't know because we haven't seen it. But that doesn't mean it's not available and it's not accessible to us. We have to get our mindset around the fact that, yes, I can become a confident investor. Okay. Point number 4, again, people don't know whom to trust. The financial system is all corrupt. There was certainly a ton of information in the news and in the media. In fact, I think they're still bringing things out in the news from time to time about the great financial crisis of 2008 and which big investment bank and which political official in the United States got together to sort of whitewash what was going on. And there have definitely been movies about Wall Street and the corruption on Wall Street over the last years, whether it was something like the Bonfire of the Vanities or The Wolves of Wall Street. You know, we are very aware of the corruption in the financial system, but that's the financial system that we have to deal with. Again, if we remember that graph that we just looked at, over the long term, you know, these downturns or these crises in the markets are just a little blip. And then, you know, even if that blip is a period of a year or 2 or 3 years, but then again, the global economy expands and the markets go back up. Okay. And point number 5 is that I don't have time. And we're going to go into this a little bit later when I talk about the money habits, but we do find time to do other things in our life that are important, whether it's exercising or going to the movies, going to the theater. You know, if something is important to us and we want to take it on, we manage to shift things in our calendar so that we do take time. So I think that if, you know, there's a will to do it, we actually can take care of our money. And what I actually think is, when I look at these 5 different bullet points here, is that these are really subcategories of a much larger mindset block. And that is that we as women don't actually believe in our ability to be successful and create wealth by investing in the financial markets. Right? We just don't believe that it can happen. It's fine for something else, for somebody else, whether it's our, you know, male friends, Bill and Bob, or whether it's our female friends, you know, Joanne and Lisa or whatever else. It's fine for somebody else, but I can't invest. I don't know what to do. You know, it's part of my psyche that on a deep, deep level, I'm holding on to the belief that I don't deserve it, right? So when I'm faced with an obstacle like a lack of time or a worry about corruption in the financial system, rather than working on our mindset and saying, yes, these are obstacles and I have to find a way to go around it. And yes, I am deserving of building my wealth and growing a nice, you know, nest egg for the future through investing, we surrender to worry, to doubt, and to fear. So actually, the number one item that we need to implement to become a confident investor is to work on our mindset, right? We need to tap into our intelligence, that we have learned new things in the past, even complicated things, and we can do it. And we really need to feel that this is something that we can do, and it's coming to us, and it should be part of the way we take care of ourselves on a very deep level. Okay, let me just have a drink of water. If you have a question, feel free to put it in the chat box. Okay, let's move on to the pillar number 2, which is developing strong money habits. And this is something that came to me. It was really an aha moment this week. I was in a presentation, and the speaker was talking about Stephen Covey's 5 Habits of Highly Effective People and how we organize our time in our life. And maybe, you know, you guys are familiar already that there are 4 different quadrants that Stephen Covey talks about. You're asked, what about the fear of losing money on investment? Okay, remind me at the end, and I'll come back to that. Okay, because I'm moving on now to financial habits, Mira. Thanks. Okay. So financial habits. We have 4 different types of, let's say, events that we meet in our lives. There are things that are important and they're urgent, like a baby that's crying. As women, we probably all know that when a baby starts crying, we get all flustered and we run to the baby. If there is a kitchen fire, and I actually had this on Friday last week in my house, I went out of the room for a moment and then I came back and my toaster was on fire, and you can better believe that I ignored everything else and I dealt with my toaster. And there are some other, critical, important and urgent things, calls in our life that we have to drop everything and that we have to deal with. But for most things in our life that are not urgent, but they are important, and that's the yellow square there, quadrant number 2. Those are the things that we tend to put off. It can be exercise. Like, we know that we need to exercise like 30 minutes a day, 5 days a week, right? But that's always something that we're going to get around to. So we put it off, and yeah, we're going to do it at the end of the day, but for some reason we don't actually get to it. Number 2 on that little yellow square is our vocation, right? It's important for us to take care of ourselves, invest in ourselves in terms of our learning and our skills, and so we can actually propel ourselves to the next level in terms of our future and our earning potential. And the third thing in that little yellow box is planning, and I consider financial planning, investments, part of that quadrant. Is that, yeah, we all know that we need to invest and take care of our money and grow our wealth for the future. It's something that's on our to-do list, but maybe it's kind of boring, or again, we have these mindset blocks, so it keeps getting pushed down, lower on our to-do list, and we never get around to doing that until maybe it's too late. Okay, quadrant number 3 is things that are not important, but they are urgent. And so we, whether it's interruptions, like when I'm working on my webinar, working with a client, when my kid's pops his head into the room. So yeah, I have to take my attention and leave what I'm doing for a moment. And quadrant number 4, things that are not important and not urgent. And these are huge time sucks and huge time wasters. Things like scrolling through your Facebook page, things like, let's say you are checking your email all the time because you think that there just might be something that has to be answered. Phone calls that come in. I don't know, there seem to be so many insurance agents that call, or, things that are always, and especially in this technologically sophisticated day and age, there are always pings and rings and buzzes and things that take away our time and our focus. So quadrants 1, 3, and 4 are things that happen in our day-to-day life that take our attention away from what's really important but not urgent, and we're putting those not urgent things on the back burner, and sometimes we don't get around to them. And I think that for a lot of people, and especially women with their mindset blocks, that's exactly where investing falls. It's not urgent. I've heard that I need to invest and grow my wealth for the future, but there are so many other things that are happening in my life that are, urgent, or they're pinging at me, and so I just drop the money stuff and I don't get around to it. Let's talk about a few other strong money habits that we need to develop. Haphazard or planned spending, right? If we're going to take some of our money and invest it for the future, then, at any point in time, the income that we have is finite. Over over longer periods of time, yes, there is really no ceiling to how much money you can bring in. People are building 6-figure businesses and 7-figure businesses, and we can increase our income. But in any day of the week, the amount of money that we have is defined. And we need to make different choices about our spending and take some of the money that we have and put it aside so that we do invest it for the future, and we do take care of our future self by using some of our current money and putting it away. That involves defining better our needs versus our wants. Yeah, we might want to go out to a fancy restaurant. We might want to go out to the movies or to the ballet or something like that. But if I'm not taking care of my future self, it might be nice to do all those things in the present, but I probably need to make a better division and make it clear, what do I actually need and what do I actually want? And what I really need is to take care of that future self, right? When I work with my financial planning clients and they're filling out their intake questionnaire, and one of the questions is, what do you want to avoid, or what do you want to deal with in the future? One topic that comes up over and over again is that people do not want to be a burden to their children in the future, right? None of us want our kids to have to take care of us financially. Well, if you want to make sure that you're not going to be a burden to your children in the future, then you need to take some of the money that you have today, and you need to make sure that it's going to be there for you in the future. Okay, so that involves, paying yourself first. It's something that we may have heard about already. Again, your money comes in, take the cream off of the top and invest the money and pay your, take care of yourself for the future. It also involves strong money habits, like having a savings account, a safety net, so that when something happens in your life that's unexpected, like a pipe is burst in your house, or the tires on your car blow unexpectedly, or one of your animals needs to go to the vet, whatever it is, you need emergency dental treatment, or your child breaks your glasses. I've had that happen. You've got money there, and you don't have to suck it out of your investments. And oftentimes you're going to have like a tax penalty on that, or you're going to have to withdraw money from your investment accounts exactly when the financial markets are down. But if you have a safety net there for emergencies, you're not going to have to do that. And then the second part of having like a safety net is also having a financial freedom account. And that's so if anything good or exciting comes up in your life that you want to take advantage of. Let's say you want to all of a sudden go on holiday because there are low price tickets to Europe, or you want to go to a conference on the other side of the world, or someone is getting married and you want to go. You have the freedom to do that because you have also been putting money away on the side. And then the last point is to develop strong money habits. What you really have to do is become an active participant in your money management, and not just leave it all to chance, or not leave it to some sort of haphazard. So Miriam is asking, are you suggesting to actually have separate accounts for these things? So yeah, when I work with my money coaching clients, I do suggest that they have different savings accounts. It is, I will say that in Israel, because of the way our banking system works, Miriam, it's not so easy to have separate accounts. In the United States, and I have some clients there, it's just really easy, just like click something on your online bank account and you can open up another account. Here it's a little bit more complicated, but yeah, I would have my regular bank account where my money, my salary, or my business income is coming into it, and then separate some money into a safety net account and separate some other money into a financial freedom account. So, and it keeps it separate, so that way you're not going to accidentally spend it on something else. So we have a picadone within the account. Yeah, exactly. And you can either have two picadone, two deposits within your account. So you know that one is for emergencies, for example, and you know that one is for other unexpected events, let's say good things that come up from time to time in your life. But really the critical point is that it's really important to be an active participant in your money and not let it just, don't just leave it to chance. Or again, as women, I was communicating with someone in a Facebook group this week, and she was saying, I find numbers so boring. And here's someone who has her own business, right? I find numbers so boring. I was like, well, how do you even know if your business is profitable if you find numbers boring? You really do need to have some sort of connection with what's going on. But she leaves it all to her husband, which is great. They've managed to get 2 kids into college already, so they're doing something right financially. But I think it's important to, again, know how much you have and know that you're going to have enough money to take care of yourself in the future, and to be, a partner in the management of your accounts. If you're married, if you have a partner and you're working on this stuff together, there is a division often in a family or in a partnership between activity. We can't both be doing the laundry all the time. We can't both be washing the dishes. We can't both be, the one who has the main responsibility for taking care of the money. But I do think that it's really critically important for women to understand what's going on, because again, at some point in the future, they're more likely than not to have to deal with it. Okay, so the big question again is, what's standing in your way that's preventing you from creating financial change? And is it a mindset issue like we talked about before, where you need to realize that this wealth and this growth of your assets and taking charge of your money is something that you can do and that you deserve it and you're worthy of it? Is it something else? it's important to really dig deep and to try to figure it out so that you can take charge of your money and become more confident and feel more empowered with your money. And this is a lovely quote that I always share, and that is that taking care of your money is exquisite self-care, right? So many people say that they can't sleep at night. They wake up nervous. They wake up in sweats because they're worried about their financial situation. So if we take the upper hand and we take care of ourselves, it's going to feel really, really good. That manicure that we have, or that massage that we go for, and women are good at taking care of themselves in certain ways. They're not going to last you until you're 100. You're going to have to do another manicure in a couple weeks, and you're going to have to do another massage so that you feel relaxed. But when you're taking care of your money, it has long-term benefits that keep you, stress-free, or that reduce your financial stress. And so I think it's really, really, really important to understand that, taking care of your money is the foundation. It's one of those essentials that we need in our lives. Okay, so let's just move quickly through, money education and financial literacy. And when I transitioned into financial planning from the corporate side, I thought financial literacy, and there's a lot of talk about this in the financial press. That's all we have to do is understand what stocks are, what bonds are, what mutual funds, and once we understand what they are, that's it. It's a done deal. But I realized and I discovered that even people, some of my clients who had very nice investment accounts and had very large incomes still felt stressed. When they excuse me a sec, still felt stressed out from their money. So financial education is important because it's not going to be comfortable to invest if we don't understand what's going on. But it isn't the only answer. It's just one of the 3 pillars of becoming a confident manager of your wealth. Okay, so let's just talk very briefly about some of the financial instruments that we have, the most common ones in the markets, because once you understand these, and maybe nobody even discussed them with you before or explained them to you, but it definitely helps you to feel like you're in the know. Okay, so the main financial instruments or assets that you will have access to, especially as a beginning investor, are stocks and bonds. The difference between them, right? People hear about the stock market. Stocks and shares and equity are all synonyms for the same thing, the same type of asset. And when you own stocks and shares, you actually own a part of a company, right? So if you own a stock in Coca-Cola, you own, I don't know, a window, a floor tile, something like that in Coca-Cola. And when Coca-Cola is profitable, then the value of your ownership in Coca-Cola goes up. And I think we can understand that, right? If you own a house, an investment property, and the value of that investment property goes up, so again, your wealth, or the value of your wealth, is going up. And so it's just similar with stocks. There's nothing fancy about it. But when I showed you that graph 10, 15 minutes ago about how the stock market goes up over long periods of time, so it's important to realize that when you own stocks, you are you are part of that growing global economy, that companies do expand, and that over time they are profitable. Okay, so that's stocks. Bonds are just like a loan, right? A lot of people don't even know what bonds are. When I meet with people, when I start talking about the difference between stocks and bonds, it might even be, the first time that they've ever really heard about bonds as an investment. But when I started out my career on Wall Street, I was actually on a bond trading floor. That's where I was working. But when a company like Coca-Cola wants to build a new bottling plant somewhere in the world, like China or whatever, they can borrow money from the bank, or they can borrow money from a bunch of investors, and they borrow money from investors by buying bonds. And Jen says she had no idea what bonds were before she started working with me. Great. I'm glad that your financial education has improved in the last year. That's great. So bonds are less risky than stocks, Stocks have that nice graph that we saw that goes up and down and down and up. Bonds have an interest rate on them, and we know from bank accounts that bank accounts have interest rates on them. So there is a regular flow of money to the bondholder. The bondholder is the lender. And also there's a fixed period of time for most of the bonds out there. There are some, but we don't have to deal with those that are like perpetual. And if a company does run into default, goes bankrupt, the owners of the company are the ones who get paid last, right? They will sell off all of the tables, chairs, equipment for scrap metal, the computers, and with that money, they will pay back the lenders before any of the owners get paid. So that's another reason why bonds are a much more stable asset that you would want to have as part of your investment portfolio. And the next two big financial instruments are mutual funds and ETFs. ETF is short for exchange traded fund. And both of these different types of funds are basically pools or collections of investments in one nice little package. So you can buy a mutual fund or an ETF that invests in stocks. It will hold a bunch of stocks from different companies. You can buy a mutual fund or an ETF that invests in bonds. And again, it will own a bunch of bonds from a government or from different companies. And you can buy funds or invest in funds that actually hold a combination of stocks and bonds. And there's also real estate and commodities like silver, gold, oil, wheat. Those are also different types of asset classes, but we're not going to go into those different types of investments today. Miriam asks, can you tell us what mutual funds and ETFs are called in Israel? Yeah, in Israel, a mutual fund is called a Keren Ne'emanut, and ETFs are basically Te'udot Sal. Te'udat Sal is really an exchange traded note, not a fund, and there is going to be something different that's coming into the market in Israel. But those are the two main types of investments that are collections of different types of assets in one investment vehicle, a Te'udat Sal or Keren Ne'emanut. Okay, let's talk about two ways in which you can get started investing in the financial markets. And these are really easy, I would say, almost painless ways of getting investing. And those are the second and third bullet points: robo-advisors and micro-investing. Okay, again, when you start investing and you don't know how to start, and that, again, is a very, very, very big block for women. They just don't know what to do. In our technologically sophisticated day and age, and this is really only a development in the last 10 years, so we're living in great times. There are robots that do the job for us. All we have to do is decide, what kind of portfolio do I want to invest in? Do I want a conservative investment portfolio, which means going to have more bonds than stocks in it? Do I want a balanced investment portfolio, which means probably about equal stocks and bonds in my portfolio? Or do I want an aggressive portfolio that has more stocks and bonds in it? These robotic advisors offer about 5-7 alternatives, and at the click of a little bubble on a computer screen, it's really, really easy to get started. You don't have to be a techie or a financial geek. You decide that, yeah, I'm ready to start. I want to start with a conservative portfolio, whatever it is, but it's just so easy in this day and age to get going. And micro-investing is simply a subset of robo-advisors where you can start with really, really small amounts. You can, there are some micro-investing, these are apps that you can get for your phone where you can start with as little as $1 investing in a mutual fund or an ETF that has stocks and bonds, and you don't have to figure out, which stocks and bonds to invest in, because these apps or these robo-advisors do it all for you. So Julie Gibbons says she has no idea. Yeah, so Miriam asks, are these tools available to Israelis? Unfortunately, Miriam, not yet. Yeah, I wish they were, but they are not yet. If you are a dual citizen, you might be able to access these robo-advisors or these micro-investing apps in your, country of origin where you may have come from. I can't really go into details now on this in this webinar, but we could talk about it at another time. So yeah, in Australia and the United States, for example, Acorns is a very popular micro investing app. In the US, there's also Stash. There's Wealthsimple, and I met with the folks from Wealthsimple when I was at the FinCon conference in Dallas a couple of weeks ago, and they're a big robo-advisor in Canada. They have about 80% of the market share in Canada, and they've also moved over to the UK, and there are different robo-advisors or micro-investing apps that are available in the UK as well. So the world is moving over to being the barriers to entry to investing are going, they're dropping. And what's interesting also is that these, robotic systems are also aware that people want socially responsible investing. And I said that in the beginning, that women want to be socially responsible, and there are alternatives for that as well in many of these. Chava Silver says that she has to run to work. Great. So I hope, Chava, that you will catch the rest of the recording so that you will become a confident and empowered investor. Thanks so much for tuning into the session today. Okay. So let's sum it all up, right? As we said, there are 3 different pillars that are very critical in your investing career, right? It's your money mindset, it's your money habits, and your financial education and financial literacy. And when you take charge of your money, it enables you to shape your financial future. And that, means that you need to take ownership of your mindset and your habits and your financial education, right? You can't just leave it all to chance or say, no, it's not urgent. I'm not going to get to it this week or this day. But when you do decide that it's your time to take ownership of your money, what's fascinating is that you're actually leveraging your time and your money, because you get yourself going, and then your investments can tick away in the background, right? They can grow into a nice financial cushion with very little involvement from you. You can even make, with these robo-advisors and micro-investing apps, you can make automatic investments, and when we automate things, we know that they're going to get done. So things are just happening in the background while we're taking care of our day-to-day life, and we're going to get to our future selves, and we're going to be like, wow, look at that beautiful nest egg that I've built up for myself. Okay, so if this is something that speaks to you, right, and you're ready to take ownership of money, and you're ready to be a leader of your finances for your financial future and create that financial security and financial freedom that, we all say is something that's really important to us. And you're also ready to up-level your mindset and to feel worthy and to feel deserving that you can create wealth, right? Then, as I said at the beginning of the webinar, I have a special offer for you today. And I'm really excited to let you know that my signature program, Smart Women Build Wealth, is once again opening its doors for registration. And I'm inviting, all of you women in for round 2. Okay, I ran it in February this year, and now this is the second time I'm running it. So Smart Women Build Wealth is a 6-month financial empowerment program for women. And what you get with the course is there are 12 live online classes. And this time around, I'm also going to add a bonus call right before the holidays, because in December, many people all over the world are moving into holiday mode. And I think it's important that we stay connected with our money during the holidays. Okay, the program involves worksheets with really easy, actionable exercises, and also some that work on our mindset so that we have to dig deep and understand what's holding us back. There is a dedicated Facebook community for the group, and the women who were in the program last time around are going to stay in the group so that they can continue the conversation, and they will be that encouragement and support that we all need as women. And I'm there all the time, so it's a high touch and compassionate group, lots of hand holding for people who don't know, or they don't know how to get started. And Jen is really excited to do it again, and Tash is really excited to do it again. Yay! I'm so glad that you guys are looking forward to it. So let's understand what you can create through Smart Women Build Wealth. First of all, we're really going to work on our mindset so that it's going to be something positive. You're going to feel much more confident and empowered and know that you can take care of your wealth. Both Tash and Jen, who are here on the call with us, have started investing, and I was really excited this week to hear how much each one of them has started investing since jumping into the class in February. Right? You will feel that you understand financial jargon. Right? We touched a little bit on it today, but there's more that we can still learn. You'll develop stronger money habits. And then when you go to meet with a financial advisor, if you want to move beyond these robo-advisors or financial apps, and this is only one small part of our financial life is the investments. There are other parts to it that we discuss in the course. And just having that language and having that confidence and being able to sit up straight in your chair and ask sensible questions, it makes it much more comfortable to speak with our financial advisors. Right, Jen says she saved $400. Yay! Okay, so let's see what else you're going to create in Smart Women Build Wealth. More savings and investments, and we just heard from Jen that she was able to put away $400. Less debt if you're working on paying down your debt. Again, stronger money habits. More comfort with your numbers. Even if you think you're not a numbers person, I really don't think that investing is rocket science. And you'll have more choice, right? When we have stronger money habits and we're holding the reins to our money, so then we naturally have more choice because we're deciding and it's not haphazard. Okay, and here's some testimonials from the women who were in the group before. Jen is on the call with us today, and she says that the program exceeded her expectations. I'm not going to read through this. You guys can look at the recording, and you can go and you can read the testimonials from the women who were in the group. Tash says that she recommends it. Jen, yeah, you wrote a lot. I even cut some of it out, but thank you. I really appreciate it. Here's another testimonial from Louise, who is from the UK, who was in the group last time around. Right. And the bottom line is she feels now that she has more confidence and she can use her money and make moves and live a more wealthy life in the truly holistic sense of the word. Okay, so what is your investment for Smart Women Build Wealth? At the moment, I'm running an early bird special until Monday night, this Monday, November 13th. It closes at midnight GMT, and the program costs $695 US. After that, after Monday night, the full price is going to be $895. And if you would like more information, again, ask right now on the call, or this is the website where you can, or the URL where you can go and find more information. DebbieSasson.thinkific.com/courses/wealth. And let's see, David put it for us into the chat box. Thanks so much, David. So you can copy that down and feel free to click it or go onto the website and really see the 12 different modules that we're going to be covering in the course. And if you have any questions, please feel free to pop them into the chat box. I'm here and I will stay on the line. I know some people have to go to work, but if you have any questions, please feel free to ask them. I'm here for you. Okay? When it comes to money, you put your heart and soul into your life's work. You want to choose how your money grows and not surrender your power and your control to someone else whose decision-making you don't understand and whose values are inconsistent with yours. And that's what happens when we go to financial advisors and we disconnect ourselves from our money, is that they're the ones who are making the decisions and we're not in the driver's seat. So when you feel more confident and more empowered around your money, you take leadership and you take ownership of your money. And that's what I want for you. And that's what Smart Women Build Wealth will give you, is, the ability to be the leader of your money. So thank you very much for joining me today. Again, if you have any questions, please feel free to put them into the chat box. I'm here for you. Happy to answer questions. Miriam wants to talk with me personally. Okay, so great. So Miriam, let's talk. You can reach out to me by email. Someone's boss just walked in. Yep, we don't want to let them know what you've been doing here on your work time. If you have any questions, I'm here. Otherwise, thank you very, very much for joining us. And probably by tomorrow, you'll get the replay. So if there are any other questions, you will be able to go back and review the information. Jen's asking, you talked about it from FinCon. I'm not quite sure what your question is, Jen. Let me just put my email in the chat box here for Miriam. Debbie at. Okay, there's my email. On the topic of not knowing whom to trust, do you have recommendations for money managers in Israel? Yeah, just, feel free to reach out to me at my email, and we can talk. See just above, the equivalent of Acorns for Aussies. Right. So when I was at FinCon, so I spoke with people from Stash, which is an app that is geared towards U.S. investors, and I also spoke with someone from Wealthsimple, and they're the ones who are the major market shareholder in Canada, and they've moved into the U.S. and into the UK. So is that what? Yeah, Wealthsimple for Canadians. That's right, because you're Canadian, Jen. So you can look them up. And there was someone else that I spoke with. No, it was Wealthsimple. Yeah, they actually emailed me this week, and I was really excited because I told them that the investors in Israel have a hard time accessing different, whether it's robo-advisors or different investment platforms, and they're actually looking into it for, I don't know if it's only Israeli U.S. Citizens, but it would be wonderful if some of these robo-advisors would open up their platforms to, certainly American citizens that are expats and perhaps expats that are living in other parts of the world. Tash is asking, if someone is putting money away into savings and investments regularly, are there any other behaviors or habits you think they should focus on? Gosh, you're catching me a little bit off guard. Just being consistent with any of our habits, being consistently putting money away, reviewing your financial statements. When it comes to investing, you have a robo account, so it's pretty much set up in terms of the percentage of stocks and the percentage of bonds. But people who are not doing it through a robo advisor do need to review their financial statements from time to time, because as markets move, things shift. And if you think, for example, let's say 10 years ago, you put 50% of your money, let's say you had $10,000, you put $5,000 into stocks and $5,000 in bonds, and you're thinking that you always want to be 50-50. Well, as the markets move, and especially over the last 10 years, the stock market has gone way, way up. We saw that from that graph that I showed you. Today, if you haven't paid any attention to your portfolio, it's going to be, let's say, for argument's sake, 70 or 80% in stocks and 20 to 30% in bonds, because the stocks have done so much better. So it's important to rebalance your portfolio from time to time. That's a very good, strong habit. There's also reviewing your financial statements, because anytime you swipe a credit card or whatever, there are mistakes. So that's an important thing to do. Making sure that all your documents are in order, who are the beneficiaries on your account in case something happens. And, Tash, you definitely have faced that this week. There's, a huge unexpected event in your family, and you want to make sure that all of your I's are dotted and T's are crossed in terms of your beneficiaries and who's going to take care of whom, and life insurance. Yeah, working on your finances is a big part of the pie. And Meira asks, your fear of losing money. So what happens in terms of losing money is that if you are investing in one financial asset, or a small number of financial assets, that's like putting all of your eggs into one basket. And the way to reduce the possibility of losing your money is to diversify. You know, you don't buy only stock in Coca-Cola, right? You don't buy only, you know, one thing, your own widget. You know, because some things are going to go up and some things are going to go down. But the way to reduce that fear is to recognize that nobody has a crystal ball. Nobody knows when the markets are going to go up or when the markets are going to go down, in spite of all the talking heads out there that, you know, that are on the news or that they're in the newspapers, they're in the media, and they talk with a lot of confidence, and they, you know, are reflecting to us that they know what they're talking about and they have it right. You know, nobody knows. None of us are prophets. None of us can see the future. So we have to, you know, get our mindset wrapped around the fact that none of us know, and we have to do the best that we can. And the best thing that we can do is take our money and to divide it into smaller pieces. You know, some stocks and some bonds. You know, some stocks in America, some stocks in Europe, some stocks in Australia, some stocks in Japan. Like, we just divide it up. And we accept the fact that some things are going to go up and some things are going to go down. But the average of everything together is that our portfolio is going to go up. And it's a practice. You know, overcoming our fear to anything is a practice that we have to work on. But as I like to say, if, for example, you have a fear of swimming, I don't know, people do have a fear of water, and that's not my area of expertise. But you need, when it comes to investing, it's really important to start doing it. You have to jump in. You know, when it comes to water and swimming, you can't learn to swim by sitting in a deck chair at the side of the pool. You have to jump in and get yourself wet. And the same thing with investing is that you need to get started. Yeah, it's important to understand exactly how, you know, a little bit how the markets work and what stocks are and bonds are. But again, it's so easy with these robo-advisors. And again, Meir, I know that you're in Israel, so you don't have that at your disposal, but there are other ways to get involved. We just have to do it. And I've seen over and over again that once people start investing, they love it. They get really excited about it, and it's fun. And especially like the last 9 years when the markets have been going up and they see their money ticking up and up and up and up, it's really fun. They like to do it. You know, hopefully the next time we have a downturn in the financial markets, they will also be okay with that, and they'll realize that it's just a temporary blip, and they won't bail out and panic. But the way to overcome our fear of losing money is to diversify, you know, between a number of different assets, and to just start doing it. So that would be my answer. I hope that I hope that makes sense to you. If you have any other questions, feel free to put it in the chat box. Okay, so if nobody has any other questions, I'm going to say thank you again for everybody who tuned in, everybody who joined us in today's webinar, Investing Essentials for Women. And look out for the recording, and I hope to see some of you in Smart Women Build Wealth. Thank you very much for joining me today. Bye-bye, everybody.